tell us about your first involvement in Islamic finance. When did you get involved? How did you get involved, and why?
Okay. My family's been involved with finance and trade finance in particular from a historic point of view. Originally from South Africa, but even in the UK as well. So I was running a structured finance company in the 90s. I got to around about 2000 and got interested in Islamic finance. I attended a few seminars. My late uncle was the vice chairman of Baraka Bank in South Africa, and he actually raised the awareness with me. So I attended a few seminars, actually one in New York, would you believe, and raised my interest in Islamic finance. So I started to inquire a little bit more what was happening in the UK, met Baraka Bank in those days when they were here, met Sheikh Saleh Kamel, who's one of the founders of Islamic finance, modern Islamic finance, had the privilege of meeting him. And that inspired me to look a little bit more along Sharia lines for solutions to finance. I think at the same time my family was going through a journey, being of Muslim origin, trying to find more ethical ways of finance. So those two converged. So a personal sort of family requirement, need, and then the awareness about Islamic finance growing in the 90s. I'm not religiously trained or anything. So we all started from the same place with doubt. So the first thing I would say to anyone, if you're looking at Islamic finance, you are not an anomaly. You will have started where I started, which is doubt, that this product cannot be right, and there's something wrong with it, you're trying to make it fit, all sorts of issues like that. So I started from that point as well. So the three areas we struggled on, one was converting people from traditional banking to Islamic banking, and that was much harder than we thought for many reasons. Not least education. People didn't understand Islamic banking. The second reason I'd say was we were undercapitalized. So the bank was undercapitalized. We started with £50 million capital. We were actually offered more capital at the time, and some of us as non-execs and directors, I was crossing almost on the executive role at that stage, wanted to raise more capital, but we were outvoted. And I think that was a critical error at that stage. So we were undercapitalized. We could not do the business banking we wanted to do. So that's the second reason. And the third reason, soon afterwards, was that we ran into market conditions, of course. By 2007-8, the banking crisis happened. So just as Islamic finance was starting to stabilize, the banking crisis happened, and that put all kinds of other pressures on the bank as well. We did not have a significant NPL situation either in IBB or EIIB. I don't know about all the other Islamic banks, but I don't think they did either. Primarily, Islamic banks, as you know, are not allowed to leverage their balance sheet anyway. So we were sitting in a reasonable situation. And during the crisis, I was meeting with the FSA as chairman of EIIB regularly. And we were not in the danger zone, either on capital adequacy or anywhere else. But just as we were taking off, we had our wings clipped, like many other banks. I believe if the financial crisis hadn't come, IBB would have turned to profitability earlier, but it would have had to be recapitalized. In other words, larger capital base. It's the same, by the way, with the Islamic banks have been involved in South Africa, Pakistan, or Singapore. All are the same. If you undercapitalize a bank, it will not work. Okay, and that's not just Islamic banking, it's any banking. But it's more relevant to Islamic banking in my view because we cannot leverage our balance sheet. Okay, so where I've heard and seen some ridiculous articles about Islamic banking, I think they're written by people that don't understand Islamic banking necessarily. So you've got to understand the basics of Islamic banking to understand the hurdles we need to get through. In EIB's case, it's totally different. EIB was profitable, by the way. While I was there, we made significant profit in a couple of years, paid dividends, etc. EIB was directly hit by the crisis, there's no doubt. We're an investment bank, so we had invested, okay, whether it's in property or oil fields or stocks, etc. So we were hit like most other banks when the Lehman crisis happened. So that was a market factor issue. EIB, the capitalization was less of an issue because we raised funds for different projects. But EIB was, there's no doubt in my mind, affected by that. It also had an issue because the shareholding was very diverse, and as I left the board, when I stepped down, there was a fracture between different shareholders. And so that you cannot legislate against. It can happen in any organization. Some of the other Islamic banks that entered the same realm as EIIB, the European Islamic Investment Bank, they did well because they had one major shareholder and they managed to navigate through that period. EIB then moved, of course, bought Rasmala and moved mainly its operations to the Middle East because that's where it found its USP. So it wasn't, in my view, although it wasn't there at the time, I don't think it was a failure. I think they took a view, the shareholders took a view that they were not getting a significant return in the UK, and the cost of having the regulation from the UK was too high. Simple as that.
Or do you think they had, beyond the structuring and the steps involved to get there to make it halal, do you think stakeholders had actually expected a different outcome as well, like social impact bond, Islamic finance to be leading in social impact bonds, or in the green finance market, or like Barclays got a green mortgage? Do you think that was the case, or
yes, I think
not really?
I think again we underestimated how long it will take for that to happen, especially in the UK, because this is a non-Muslim country. Now, having said that, in South Africa, for example, with Baraka, it's worked very well. In the 30 years since the bank started, the social impact of Baraka Bank in South Africa is phenomenal, by the way, absolutely phenomenal. But the community there, it's less Muslims there than in Britain, but because of their, let's say, their own personal beliefs and structures, the support for the Islamic Bank was much more significant than it was in the UK. And that itself created profitability, and that then created a huge bond, as you're saying, a social and ethical fund called ICRA, which is quite large today. In fact, it's probably the largest amongst any Muslim group in South Africa. So it has worked. I know it works in Pakistan, I know it works in Malaysia, Indonesia, etc. So Muslim countries is a little bit easier to make it work. Here it was harder because some of that is linked with profitability. The profitability doesn't come. You don't have the ability to create those products. That's one part of it. Of course, there are other issues as well. I have two requests with them from learning from our experience. The one is that they actually do find products that are more ethical in nature. The musharakas, etc. And I think that's where the future lies, because it distinguishes you from non-Islamic banking. Rather than trying to compete with non-Islamic banking, I think you need to have something that is niche. And other scholars have mentioned the same as well. So I actually think that's the one area we need to concentrate on, is to distinguish products that stand out and not only appeal to Muslims but to anyone. So they're ethical in nature. And maybe terminology, etc., needs to be changed on that. The second side, I would say, is that they do need to look at profitability. I think that technology and the changes, the virtual changes that are happening, play into products like Islamic banking, not only Islamic banking but others as well. So the virtual banking world reduces overhead and costs to an extent that levels the playing field. So on the retail side, I think that's very important. On the investment side, I think the playing fields have been reasonably level anyway. But what has happened is that the scholars who have approved products, etc., have also gone 20 years ahead with what they do. Some have compromised, I believe, what they've said. Others have stuck with what they always have said by the true nature of Islamic banking. And I think the latter are the ones who will create and help create successful institutions. But again, I think there's an awareness of ethical banking, and I think in Turkey they call it participation banking. And I think that's the area we need to go to. So we're appealing to a wider base, not just to Muslims. And that's why I'm positive on the fact that I think Islamic banking has a place. And it's finding that place. I don't think it's found it yet, but it's finding it.